Am I being heard? Is there? No one's saying anything.
Yes, we can hear you.
Okay.
Everybody loved him as a result of that.
All right. So let me start over again by saying I want to start with a question tonight, based on what's in the news about rising interest rates, about different parts of the housing market are starting to show some signs of slowness, the increased value of the dollar. Who is an optimist and thinks things are actually pretty good and going to get better? Anyone? Mari's got his hand up, so tell me why your opinion is that you think things are going to get better.
Well, maybe I should clarify what offer is that if we kind of take like a full stop, it might get better, but it looks like we're sliding. So it's kind of like we're at the top of the hill, sliding down fast. So if somehow we could stop and catch our breath, it might be better. So that's
well, if the statistics that I've been looking at, which I think are very consistent with this economic interpretation of cycles that we have this repeating 18 and a half year cycle, and that 2026 is the most likely point where the stresses on our society, on the economy, reach a maximum point, then we still have some room for positive growth. We might see a mild recession and recover from that. And as we get closer to 2026, the question then becomes, have we just gotten a bit of a reprieve, and are we still headed for that point of maximum stress that I've been talking about in this series of lectures? That's why I thought I'd pick up with this image, of the passage of time and how whether or not we're just inevitably getting closer to this crash. And I think that's something that has been shown consistent throughout history. And now the question is whether or not what economists call externalities might soften the depth and duration of the crash or exacerbate it. And there are all these signals that the global economy is under great stress, and then we have the current shocks to the system, the high energy costs, the disruption in the flow of fossil fuels coming out of Russia. The many countries are really suffering now by so much more of their consumption ability going into the cost of fossil fuels for energy. And how will businesses react to all of that? And will this problem be resolved, in the next year or so, or will it be exacerbated by continued, warfare and the tensions that are occurring in Europe and between Ukraine and Russia and the rest of Europe? All these things seem to be very much shocks to the system, and yet, as I've tried to show in the previous lectures, despite all these shocks to the systems, the economic cycle has continued to repeat. And it's continued to repeat whether or not there have been, in the United States, a conservative government, which tries to cut back on public expenditures, or a progressive or liberal government, which looks to providing more and more financial assistance to the economy in the form of incentives to produce, or the going back all the way to Franklin Roosevelt and the New Deal, all of those programs. Despite all of it, nothing substantive, systemic has been done to tame the cycle. Probably no one has done a better job of detailing this than Fred Harrison And I'm sure most of you, know Fred and his work. He's been hammering away at these issues for a very long time with his books and his, production of documentary films on YouTube, etc. And here's a couple quotes from Fred that I think really tell a lot about his findings and what he's telling us. The failure to eliminate or control the business cycle, despite repeated attempts to do so, suggests that the received wisdoms do not lead governments to remedies that work. A second reason is that economics as it is employed today is seriously prejudiced by the dilution of some of its key concepts. Economists routinely work with economic models that treat the world as if it were composed of two factors, labor and capital, instead of the three-factor model favored by the classical economists. This disembodies the economy from its spatial context, for land is the key piece of the jigsaw that is the complex economy. And that says in just two small statements a lot about what's wrong with how our governments and most analysts view the working of the economy. Fred's been sharing his analysis with the public, with other economists, with government officials for 5 decades in articles, and he's written a dozen books. The sad reality is that few have been willing to listen, and even among those who did listen, fewer still acted on the evidence. The message that he delivers couldn't have been clearer. And if it had been heeded, perhaps we wouldn't need to be having this, series of discussions today. He says, with the correct policies in place, the major social problems that we face in the world today can actually be solved. The way we take resources today actually abuses people and abuses the community. Taxation is based on arbitrariness and abusiveness. It is not based on principle, on the realization that actually we all ought to pay for the benefits that we receive. And it's pretty clear from the study of Henry George what those benefits are with regard to the opportunity that we have to control any portion of nature. If we look objectively at a record, I would say, we really know that long-standing public policies reward behaviors that are detrimental to communities and to the stable economic growth that would employ every person at a living wage. Our laws have been fine-tuned to defend privilege, to make it both possible and extremely profitable to monopolize and control access to what nature freely provides. Not widely known is that the original purpose of the board game Monopoly was to teach people what was wrong with this existing arrangements. Some of you probably know that, the history of the game of Monopoly. For those who don't, the game's inventor was named Elizabeth McGee Phillips. She was a Quaker, and she called her version the landlord's game. It was patented in 1904. She based the game on the principles contained in the teachings of Henry George. The rules revealed how the private appropriation of land rent enriched owners and impoverished all others. And in one set of rules for the game encouraged cooperative behavior and basically eliminated the potential for monopoly to occur. But that wasn't the version of the game that people love to play. They love the, take no prisoners form of monopoly that allows you to sit around the table with your friends and family and economically decimate them. So it had something to say about human nature for sure. The lessons of the game are certainly timeless. To tame the boom to bust nature of our economic system, the rental value of land in all its forms has to be collected by government for the benefit of all citizens. The most basic form of this policy is generally referred to as land value taxation or land value recapture. And that term, it's been given all sorts of different terms by different people throughout the last century or so. But most easily recognized today is the fact that the proposal is to use the tax mechanism at the local property tax level to capture land value. But what is really meant to capture is land's rental value. But there are, as I'm sure most of you know, who've taken courses at the Henry George School, getting to that point where you're fully capturing land's rental value has some complexities to it. Excuse me. Now, as I've described earlier in the course, I recommend a number of changes in public policy that would move us closer to where Fred Harrison argues we ought to be going. Excuse me, I really apologize, but I'm really having some nasty buildup of my sinuses from this head cold. But here's just a list of some, not all, of the potential sources of rent that could be publicly collected to pay for public goods and services. Mason Gaffney in his writings has identified an even longer list that you want to refer to. But it just shows that there's a great deal of potential to raise revenue from these various sources if we could just convince our public officials to take the steps necessary to do so. So I really ask the question then, what do we do to move us in the right direction? In a sense, I'm an incrementalist in that I accept the argument the perfect is the enemy of the good, meaning that as much as I would love us to quickly move in the direction that Henry George advocated, the political reality is that we've never been able to get that kind of momentum going. The closest that the world came was when Henry George was still alive. And after that, the proponents of his ideas, faced the reality that there was so much political opposition that they tried to move incrementally themselves in the right directions. So we already have state and federal income tax systems in place. My view is that these need to be restructured to distinguish between income that is earned by producing goods and providing services and income that's derived from passive and speculative investment activities. The changes that I would recommend combine a dramatic simplification with meaningful progressivity. And so what form would that take? And here again, the objective of this proposal is to take advantage of some momentum for tax reform that already exists and move it in the direction of being able to capture a higher and higher level of unearned income, of rents. So at the federal level, I would propose that all individual incomes up to the national median should be exempted from taxation. So that's about $60,000. And each state could do the same using the federal figures or the income figures for that state. All other exemptions and deductions would be eliminated. Then above the exempted amount, increasing rates of taxation would be applied to higher ranges of income. And how are you going to determine what those rates and ranges are? Well, this is what the government budgeting process is all about. And so with every budget, you could determine, what the maximum tax rate is going to be on income, whether the highest marginal tax rate would be 90% on incomes over some amount, some enormous amount, That certainly, in my view, it's not going to affect the lifestyle of any taxpayer at that level, and it's going to most likely capture unearned income as opposed to earned income that's derived from wages and salaries and from actual productive activity in the economy. With this change in the individual income taxation, it would accomplish a dramatic shift upward in the direction of unearned rent-derived income flows, while it will also lift the burden of taxation off of the incomes of those less likely to derive income from the ownership of land or from other rent-seeking privileges. It has some other side effects too. One thing is that accountants would have to find something more or productive to do for a living, and maybe a lot of tax attorneys as well. But the tax simplification is something that we need. It's just too complex for most people to even comply with existing tax codes without hiring someone to prepare their taxes. And there are so many loopholes that only the very wealthy really benefit, and not to the benefit of the economy or our society. So those are just it's a basic way I think we could get to a much fairer tax system that from income collects more and more revenue from unearned rents. So here's, just for purposes of illustration, here's what I've come up with, how it might look. And again, this is just an example, of what's possible. Just to repeat, really, the bottom line is that the failure to act is not an option. We're running out of time. Whether 2026 will be, as I think it will be, the worst depression we've experienced ever, some things have to be done in order to get ready for that and to potentially mitigate the depth and duration of what we're going to experience. Nothing done to date by government is addressing the fundamental causes of economic depression. The private appropriation of rent has come to absorb such a huge portion of aggregate wealth that no amount of innovation, no amount of productivity enhancements, and no amount of efficiencies in the delivery of either public or private goods and services is capable of overcoming rent-seeking successes. Dramatically changing how governments at all levels raise revenue is the one systemic reform that solves the economic problem and that potentially eliminates the economic cycle. Going back in time, no less a public figure than Winston Churchill, campaigning early in his political career for a seat in the House of Commons, hit the nail on the head when he wrote this. He was going around delivering speeches that sounded like they came out of Henry George's writings. He says, land monopoly is not only monopoly, but it is by far the greatest of monopolies. It is a perpetual monopoly, and it is the mother of all other forms of monopoly. Now, that said, we should understand and accept that the public capture of rents isn't a cure-all. There are many other systemic changes needed if we're ever to solve our most challenging social, economic, and political problems, I think. What follows is a brief survey of additional work to be done from my perspective. But before I go into that, I want to stop here and find out whether or not you are finding yourselves in agreement. What do you think of the proposal for changing the individual income tax structure as I've outlined it? And do you have any alternative ideas that we might pursue? So I turn it over to you. Raise your yellow hand and I'll be glad to recognize anyone who has a thought.
Ed, I do have a question.
Ibrahima?
Yes, so the question is, when you do those calculations, how much did you come up in terms of revenue? Because that's always the question.
Well, it depends on what you mean. I mean, the amount that would be raised from the individual income tax is really an amount determined based on budgetary requirements. So there's government at each level looks at its total revenue sources and then decides how much revenue they need from various types of taxes. So I don't have an absolute answer, but estimates by different economists who are sympathetic with Henry George's perspectives think that between 20% and 30% of gross domestic product is rent. So there's a lot of rent to be captured by tax policy.
Okay.
I think Marty was next.
Yeah, actually, I went back in and out just to allow somebody to go in before me, but since you called on me, I think the tax proposal for the $60,000, I think I've got a better solution, but like you say, it's all about increment, and I think what we need is a million people going out doing a million things that lead us in the right direction. So I think a better solution on the income tax, since nobody paying income tax is the ideal. I think that like Henry George was talking about natural monopolies, that the rent that is collected should go to pay for like water and sewer and education, parks and all those kind of things, transit that we know to be public services. So there has been efforts to make state and local taxes deductible from your income tax. So if you made it so that, at a very high rate and we're getting great services, you could deduct that from your income tax. That would be killing two birds with one stone, and it would go show the people who are thinking that smaller government's better. Well, they're going to have to pay their income tax.
Well, I would only respond this way, Marty. If I have a 2-income household, that means that under my proposal, the first $120,000 at the federal level was tax-free. Now, states could establish a similar structure. They might want to lower the amount that would be exempt, but with that starting point, you're talking about, an overwhelming majority of individuals who are automatically exempt from the federal and potentially the state income tax. But those details are all subject to a lot of debate, and it'd be great just to have a congressional task force sitting down to study this and come up with their own version of what they think is best.
Yeah.
So
yeah, it doesn't need to be either or. It could be both of them, because what I was trying to get at is that having great public services is a big boon. So stop sending money to Washington and put it to where the services are being generated. But anyway, good idea. Thanks.
It's a lot more thought has to go into any kind of final program, but I want to emphasize two things. One is tax simplification combined with progressivity, and hopefully that will get political support. I think I saw Michael, but you've disappeared, Michael.
I will come back. It might seem a little naive, Edward, but in fact, I observe that the 18.5-year cycle is a recurring cycle, and therefore, and examples have been expressed in your lectures, etc. But it is a recurring cycle. So perhaps there is something that we're missing, really, that things go up and things come down. And we never seem to get the perfect solution for some perfect system. And so perhaps it's not all gloom, because if it gets bad, it tends to come up again.
Well, here's my only comment that when it goes bad, if it goes really bad, there's a lot of harm done to a lot of people, and so the object of the changes in public policy we need should be to significantly mitigate or potentially eliminate the economic cycle. And so the debate, the discussion, the public discussion has to be like we've had here. And that is, okay, what measures are necessary to eliminate these boom and bust cycles? And we don't have that debate. You don't have that in the UK. You don't have it in the United States or Canada. It's all idea. All the debate seems to be ideologically driven about the size of government, big or small. And I'm, we're voices in the wilderness, as is said. I mean, how do we get a hearing about alternative views about what systemic reforms need to be implemented? And that's this is the best we can do right now, but perhaps over time, quickly over time, more of the same sort of analysis will start to filter out. And I see some small signs that this is in fact happening.
I can only agree with that, but I still make the point that perhaps there's something that we're missing in the great order of things, and that we're not raising our boundaries high enough. We keep thinking that we can mitigate certain things, but it doesn't happen, and it recurs and recurs and recurs. But it's not perpetual. It's not absolute, and I derive some comfort from that, really. That no matter how bad it is or how good it is, it's only temporary, and we've got to do that as the human race.
Well, for those who are reasonably well off, an economic downturn can be a slight discomfort. For people who are living paycheck to paycheck, or in perpetual debt, an economic downturn brings along personal family disaster. So that's what we have to try to get to a point where those who are most at risk don't experience the worst circumstances when these things happen. Joe Polito.
I'll go after Rick. He knows more about this stuff than me.
Okay. All right. Joe is deferring to you, Rick.
Hi, Ed.
How are you?
Yeah. On your tax plan there, what if the first 60,000 was all unearned income? Would you still exempt that?
Yep.
Okay. So
I mean,
just to simplify it,
there's a little risk. There's a certain risk there, but the likelihood of people who are at that level deriving income that is unearned is low. With this exception, in the United States, 1 out of 4 senior citizens lives on Social Security benefits alone. Now that's a lot less than $60,000. Whether or not you would consider that earned or unearned, to me, it's basically a baseline income, and I'm not too concerned about people, receiving benefits from the government that are unearned at that level, because that's money that they need to pay the rent, to buy groceries, just and help keep the economy going. As Mason Gaffney once wrote, what runs this economy is short-term capital and spending expenditures on things like toothpaste and toilet paper.
Yeah.
I mean, those are the things that are quickly consumed and have to be, replaced on an ongoing basis.
I should have said unearned rents, because yeah, you're right in a way that the social benefits are unearned, but that's a sharing of the rents. Actually, that's the way I look at it. So it's not really
Okay, yeah.
But say the first 60,000 was all like rental income or gains from land sales.
I'd be willing to accept that as an acceptable leakage in the system, because it's going to impact such a small percentage of the population.
And my second question was, I'm just kind of baffled why Georgia just kind of ignored that whole national era during which Henry George recommended a certain kind of income tax in 1893.
I don't have an answer for you. I mean, this is look, as you, I'm sure, know fully well, when the time came for a discussion of a national income tax, it was the followers of Henry George were very supportive of it, because they felt as though, since it would be imposed only on high incomes, that it was going to be a method of indirectly collecting the rents. So they were many of them were strongly in supportive of the amendment to the Constitution to allow taxation of individual income.
Yeah, well, the amendment that the 16th Amendment allowed for the taxation of unearned incomes, and that's what Henry George caused. He caused that distinction, and without the 16th Amendment, you could only tax wages. You couldn't tax unearned income. So
Yeah.
it was kind of a historic thing that he caused, and it's like we just don't recognize it.
Well, here's the one of, there are so many different challenges to getting, as I said, the perfect is the enemy of the good. So yeah, I've covered this before, but I think one of the biggest problems with our tax code now is the favorable treatment of so-called capital gains, when in the real world there are no capital gains,
Right.
because tangible capital is a depreciating asset. And so, by requiring people to report all their income together and subjecting all that income to the same progressive rate system structure, you're going to capture a lot of unearned income. You will capture some earned income, but at the highest levels, it's not going to affect anyone's lifestyle or probably even their investment activities. So I'm not too worried. I'm not too concerned about the social cost of imposing a 90% marginal tax rate on incomes over $100 million.
Okay.
Joe?
Thank you.
Before I ask the question I was going to ask or make the suggestion, so are you saying that you would change the rate for capital gains? You would change the preferential treatment?
Yep, I would make no difference.
Okay.
You sell an asset, you report the gain as part of your income for that year, and you add it to your wages, you add it to your interest income, you add it to your Social Security benefits. It all lumps together and is subject to one rate structure with no deductions and no exemptions.
Okay, sounds like a great idea. So my focus on the capturing, well, first of all, let me just tell you something. A local group has submitted a resolution to a federal party, and we've sort of asked for that. We've asked for changing the capital gains rate on commercial real estate sales. In Canada, they don't actually have any taxes on your primary residence. And you know, that would be a difficult thing to change right now. But if you did the commercial or second properties, that might make a big difference. Anyway, my question is about inheritance taxes. Is that part of your program?
I didn't cover it specifically, but yeah, I mean, I think here again, the same sort of principle would apply to, in the sense that for inheritance, you know, the value of an estate, a significant amount should be exempted to allow to pass your heirs. But, you know, as Warren Buffett often says about his fortune, he only was able to earn that fortune because of the socio-political environment that he lived in the United States. And so I think a graduated inheritance tax or estate tax is an appropriate, you know, thing to go for. If over time, if we somehow get closer and closer to a pure rent as revenue system, then those other kinds of taxes can eventually be eliminated. But in the meantime, I do think I'm in favor of progressive taxation at the highest levels as a way to mitigate the extent to which privilege under the tax policy and under other policies in this country has enabled some individuals to become enormously wealthy.
And finally, do you think it's possible to nudge municipalities to kind of go Ted's way with the dual assessment?
Well, my answer to that is yes. And what is needed is for the work that's done by just a few people now to be done by many, many more people who are trained to provide the consultative services to municipalities, to do the studies and convince them. So, you know, if the organization headed by Josh Vincent had a staff of 50 people, you know, then I think the potential for a domino effect to occur would occur. Right. It just it's really tough to do what he does, and then every time an election occurs and a new mayor is elected and new members of city council are elected, the threat to existing reform legislation is there, and that was certainly proven to be the case with the instance of Pittsburgh. And you know, Pittsburgh was a two-rate city with all very good results, and for purely political survival reasons, the city council and mayor in Pittsburgh went back to the one-rate system, and despite the warnings of what would occur and what did occur.
Yeah. Okay, thanks very much.
Now, anything else before I move on? Well, I want to spend just a minute or two on another, you know, idea where, again, the perfect is the enemy of the good. Land trusts. I think it's worthwhile to talk about this because it is viewed, land trusts are viewed as by most people as a positive, and yet the objective is to remove land from the market economy, to eliminate its treatment as a commodity to be bought, sold, and used as collateral for borrowing. And that's good, but also land trusts look for tax exemption. So the very thing that some of us propose, and that is that all land that yields rent should contribute to the public purse equal to the rental value of that land, whether or not that Once collected, that money is used to pay for some public goods and services, or as more libertarian oriented, folks would like, distributed as a citizen's dividend. Mason Gaffney once wrote, it's better to collect, or maybe this was Harry Pollard who said this, I'm not sure, to collect the rent and throw it in the ocean would have a more beneficial effect on the economy than leaving the rent in private hands. But I don't think that's what we want to do, is throw the money in the ocean. What we want to do is use it productively, whether that is, again, directly to pay for public goods and services, or to provide people with an income supplement. But with land trust, the idea is to put land into trust, managed for the benefit of an entire community, or at least a targeted segment of that community. And for those of you who are not familiar with the history of land trusts, the concept was developed in the 1930s by a man named Ralph Borsodi. He was a leading decentralist philosopher and an activist. He wrote several books, but one in 1933 was called Flight from the City. And this, book was really a call to people to come back to the land. And in 1933, cities weren't very pleasant places for most people. And so Ralph Borsodi was trying to use the concept of land trusts as a way to bring back people to the land without bringing also land speculation into the picture. In 1958, he actually went to India and was talking to reformers in India. And here's just one brief point that Borsodi made in a manifesto that he presented while he was in India. He writes, all the natural resources of the earth, the land, the forest, the oil, the minerals, and the waters are the gift of nature, or nature's God to all humankind. No title to absolute ownership of any part of the earth can be traced back to a deed issued by the creator of the earth. That's a strong moral statement with, historical significance. And people don't think about that. They don't think very deeply about, where our right to claim part of the earth comes from, and how it, violates a certain moral principle that we share this planet together. He goes on, all natural resources are by their nature trusteity, not property. Land should be privately possessed, not owned, but owned to buy and sell, to be used for incentive to its fullest and most efficient use. But the unearned increment, the ground rent, and the mineral royalties, instead of being privately appropriated, should be used instead of taxes to pay for the necessary services provided by the community. And that's also an important observation he makes, that the public collection of rent is not taxation. It is, as Fred Harrison earlier mentioned, it is a payment for benefits received. And these are important teaching lessons that have to be conveyed to people to get them to understand that this is a movement for justice. It has economic benefits. Borsodi's ideas were then formalized in the early 1970s in a book titled The Community Land Trust, A Guide to a New Model for Land Tenure in America. And it was written by Robert Swan and some others. The first CLTs were established to help African-American farmers in the rural South to gain access to farmland, to work it cooperatively, and to gain secure ownership of whatever improvements they made to the land and any of the buildings that they constructed, because most of these, Black farmers and many white farmers were sharecroppers or tenant farmers, and they had no secure title to whatever improvements they made, on the farms that they were leasing from the landlords. So community land trusts do address some of these situations in a positive way. Now, my own experience with land trusts has been with CLTs that were created to provide housing that's affordable to low and moderate income households. In these instances, the trust owns and manages the land. Residents either own their own homes or lease homes or apartments owned by the trust. Ground rent charges are set at a level sufficient to cover any tax obligations and other expenses incurred by the trust, rather than by what the market will bear. And there are almost always restrictions on the resale of the housing unit that's established to make that housing permanently affordable. So community land trusts they're not the perfect answer, but they have been useful in mitigating some of the problems of housing affordability for those most in need. It's also clear to me that there's an ongoing and increasing need to remove some land from the market to be reserved for socially beneficial purposes. And of course, access to decent, affordable housing is one such purpose. So you have CLTs doing some of that, advocates of fulfilling the social obligation to provide housing to all. They have embraced the CLT model as far better than, say, public housing, where residents have little or no input in how the property is managed and how the community is governed. And so, I'm sympathetic to that comparison as well, that housing on CLTs provides a lot more a sense of community for people than if they are leasing an apartment or even a home within public housing structure. It's also clear to me that the need to put land in trust would be greatly reduced if anything close to the full potential annual rental value of land was captured to pay for government and for public goods and services. And again, this is why moving in an incremental way from where we are to where we need to be along several different fronts, not just the two-rate property tax, but along, with establishing community land trust, along with the individual income tax reform that I've suggested, and other potential tax reforms that are designed to capture more unearned income and more rent. Now, what about land prices? I think most of you probably remember, understand that land prices would fall close to zero with the full collection of rent. And this would make housing affordable to many, many lower income households and make it possible to construct housing for people at the lower end without huge public subsidies. And of course, the expectation is that unburdened by the price of acquiring land, the resulting sustained full employment will result in higher wages and good benefits for working people. So would land fall to zero? Would it fall close to zero if as we get more and more land rent collected? The economic theory says yes. We haven't seen that yet, where the two-rate property tax has been implemented, and even in places like places in Australia that had a high land tax, land prices have not, that I'm aware of, ever really come down to low levels. So we still have a lot of room there to collect much more land rent before the economics comes into play. Now, some other things that we need to think about, of course, the money question. So as discussed earlier, the proponents of modern monetary theory argue that conventional wisdoms regarding money creation and debt have little relation to reality. Their analysis raises the important issue of whether our society would be much better off if the US Treasury simply bypassed the Federal Reserve by directly creating monetary units, allocated that money to government departments as budgeted and spent into the economy. Then there's a lot of debate that's needed about how that would affect prices. Would it cause inflation? Would it not cause inflation if the spending went into infrastructure, whether that's physical infrastructure or social infrastructure? So from what I've read, there's just more analysis that needs to be done to determine exactly what the impact would be and how to protect the economy from an inflation if the MMT approach was adopted. Under this idea, Federal Reserve notes could be replaced by debt-free money in digital form and as Treasury issued paper currency. We ought to also remember right now, coinage minted by the federal government is debt-free money, even though our need for coinage has greatly declined in recent decades. But we do have debt-free money in the form of coinage, although most coinage in circulation has a stated nominal value that's greater than the intrinsic value of the metals it's comprised of. So it opens the door for a lot of discussion about whether or not there should be a return to coinage in circulation that's gold and silver. What would that do? And admittedly, until recently, I held on to my understanding as a former bank officer that banks are intermediaries, taking in deposits, earning fee income, and using cash balances to make loans to individuals and to private entities or even public institutions. And my early formal training in accounting always convinced me that one must actually have assets in order to transfer these assets to others, even temporarily. So it has come to quite a shock to me to finally be convinced that, and I've had some recent exchanges with different economists on this issue, that our laws have given banks this amazing ability to book loans, even though they don't actually have the cash to make the loans. Apparently, they've gotten this special legal authority somewhere along the line. And if anyone can point me to specific legislation or language in the banking laws that provides this authority, I would love to see it and welcome it. But the person that put this on the table most recently in an interview in Forbes magazine was this woman named Frances Coppola. And in 2017, here's what she said in Forbes. Money is created when banks lend. The rules of double entry accounting dictate that when banks create a new loan asset, they must also create an equal and opposite liability in the form of a new demand deposit. This demand deposit, like all other customer deposits, is included in central bank's measure of broad money. So, okay, if it's true, it's true. I always respond this way, and that is, when I made mortgage loans to people to buy a house, the proceeds of that loan almost never came to my bank. I mean, they went to 5 or 6 different parties. The seller of the property got a check. A whole long list of the realtor got a check. The appraiser got a check. The homeowner's insurance carrier got payment. If by some chance the seller of the property also had their bank account with our bank, he might have deposited a check with us. But her statement has a lot more certainty to it than I have found to be the case in the real world. Rick?
Yes, Ed, just a quick comment. I've done a lot of research on this money issue, and I've come to the conclusion that the Gold Reserve Act of 1934 is really the root cause of the problem with the Federal Reserve note. That's when it became legal tender, and it ceased being redeemable for Congress's coin. So in other words, after that act, whenever somebody tendered Federal Reserve notes, which are just pure debt, they have to be accepted. So
Yeah, I get that, but that doesn't even deal with this issue of banks creating money when they make a loan. Because if I'm a lender and I'm short of funds and someone comes in and wants to borrow money from me, all right, I can go into the credit markets. I can go into the overnight market and I can get money from somewhere else
Right.
and deposit it, in my, as an asset for me. And then I can make a loan from those assets. But what she's saying is you don't have to do that.
no, if the currency doesn't have to be redeemed for coin, the banks can do that. That's how that allows them to create the money as a
Yeah.
loan.
And to me,
It's just
for those of us who have reform instinct,
Yeah.
It seems to me that that's one of the greatest frauds on the public that exists in the financial sector.
Yeah.
And that we need to get a law passed that returns banks to intermediaries. Marty.
I think this is on the level of a best kept secret. So it's so obvious that people will say, oh, they don't believe it or something. But, I've got banking books written in 1890 that describe the same thing. So it's not anything new. And rather than getting rid of it, I think public banks and banks that are development banks are the way to go, because you put money toward things that have a positive outcome. So when people see that their bank is friendly to them, the question is, why are there any private banks to begin with when what you describe is a possibility? It's like I hear the term, Bloomberg used to talk about it all the time, commercial paper. And I think he might have been talking about the same thing, is that, you need a couple $1 billion. Yeah, we can create that lickety split. So I don't see any problem with the way the bank system works. It's just that you got criminals in charge of it.
Well, here's the next slide is something I put together just based on my own experience. Remember, I ran a department in a bank. And when every year when we go into with our executive loan committee to discuss, okay, here's Ed, here's how much money we're going to put into residential mortgage lending this year, as a percentage of bank assets. Well, it was always my understanding, looking at the balance sheet, okay, these are our assets. Here's the projection of what we think how our assets are going to grow during the year. And if you don't have sufficient cash to make a loan, what you have to do is sell some of your other assets. So, we would from time to time look at our portfolio of real estate loans and package some of them and sell them to an investor, raise cash, make more loans. And that's exactly what the business model was at Fannie Mae when I worked there for 20 years. We were the source of money for banks to make additional loans. They would originate the loan, they would fund it, and then we would purchase it from them, repay them so they could make a new loan. So this is why I'm so perplexed by what is being explained as the ability to make a loan without actually having the money to make it. And this little slide just shows what I was trained to do. I wrote the accounting procedures for my department in the bank. And anytime that I ever approved a loan and it was funded, I had to fill out a credit slip that would reduce the cash on hand that was available to me as part of the bank's budget. So anyway, I hear what both you and Rick are saying, and I need to do some more research on my own. Frances Coppola continues with a statement about following the money. And she says, in this sense, therefore, when banks lend, they create money. But this money has in no sense been spirited from thin air. It is fully backed by a new asset, a loan. And if this statement confuses you, I admit to being confused as well, because the loan is a receivable and it is an asset for the bank as an institution. But when that loan is funded, some cash account has to be credited. That is the offsetting entry on your books. And if you don't have the cash to do it, then you have to borrow it somewhere or sell other assets. So this is a question that I'm raising, and I appreciate your comments and insight, but it's not something that we can satisfactorily answer today. Joe?
The law professors have been getting involved in the money issue, and some economists as well take kind of their perspective that money is a creature of the law. It is distributed authority. You write laws, you issue building permits, land deeds, etc., professional licenses. You are using the authority, the legal authority, to mobilize resources. And assuming that there are idle resources here, it's not an economic rent situation, there's actually productive resources that are idle. It makes sense that the authorities mobilize those people through this authorizing tool we call money. We create some more. You've got the authority now to excavate a lot, to hire tradesmen and so forth. So I think it makes sense, given that the banks have this unearned right to create money. But of course, we have a different perspective on this, that they've captured that, that ability. They should not have it. They should be intermediaries, as you say. But someone has to create the extra money to mobilize the idle resources. And in that respect, does make sense. The Michael Hudson said in a video, maybe I can put it on the chat. He said, number one, the Chicago plan should be part of MMT. And number two, he said that to provide the banks with the necessary funds for a growing economy, the monetary authority would lend more money to them to do that, as opposed to allowing them to create it themselves. And that would also permit them to regulate the banks a little more. So I think what you're describing makes sense, but it's being done the wrong way. I think Michael Hudson has got a much better handle on how it should be done. But at the end of the day, the balance sheets would look the same. The resources, the real aspects of the economy, land, labor, and capital, would be mobilized, and it would work.
That is a hopeful projection, in my view. I don't know how. I have some ideas of how to get the genie back in the bottle, but I have to listen more closely to what Michael has to say on the subject. I'm a guy who was, in the trenches. That's, my day-to-day, work was always in the trenches, making loans or trying to figure out how to balance the risk of making loans to different parties, how to price that risk, et cetera. And I have this sense that we have gotten too far away from that responsibility because of the ability to sell off portions of the risk under collateral mortgage, debt obligations, derivatives, and all these other special financial vehicles that take us away from the true analysis of how to extend credit and make loans in a prudent manner, and getting banks to return to the role as an intermediary responsible for protecting the assets of the bank. I think that, well, anyway, let me go on, because I want to talk about just a little bit about the history lesson that in my mind is so important in coming to decisions about what to do about the current risk that the financial system is bringing. And again, focused on the economic cycle. The financial system has been a vehicle to put fuel on the fire of the boom to bust cycle. So we know, for example, our property markets have been credit fueled and speculation driven. And the more credit that's made available to speculators, the higher they will leverage themselves, and the greater will be the stress imposed on the economy by the speculative part of the property markets and other markets. I mean, the same thing applies to the market in equities and allowing, high margins, people to buy stock on high margins and that kind of thing. But think back of where it all began, okay? The Bank of Amsterdam in the 1600s. If the federal government can simply create money and spend it into the economy, is there still a case to be made for what centuries ago was called receipt money? That is currency that is actually a receipt for coinage deposited and held by a deposit bank. And that's what the Bank of Amsterdam was chartered to be. So I think there is good merit for an international system of deposit banks to be established. And this could be a bulwark for the financial system globally. What would it look like? Okay, here's my thought. What if nations agreed to monetize some portion of their gold and or silver reserves, meaning they would each mint coinage of a standard weight and metallic content? This coinage would be deposited in the government-owned deposit bank. Private individuals and entities could become depositors/members by acquiring precious metals that are then minted by the government, and the value credited to the accounts of these individuals with the bank. So you'd have full reserves. In other words, the banks would hold this coinage and they would issue receipts, digital or otherwise, that could then serve as one form of currency that would be exchanged in the global markets. And what's one of the advantages of this structure? Well, there are a couple of them, I think. One is this part of the money supply could be used for purchases from sellers located in other nations with no risk that the currency would experience declining purchasing power. All the coinage is the same, so it's going to be exchanged at par. There's no hedging, going on, no concern that because of certain public policies of a different country, tax policies or whatever, that money would have a lower value than than money that is in the bank of deposit in your country, because it's all the same. It's all the same metallic content, the same weight. Is there enough for this to satisfy all, exchanges? No, I don't think so. But it would, I think, establish at least part of the economy, the international part of the economy, on a firm, more sound basis in terms of stabilizing the exchange, eliminating the exchange rates between currency. Now, I want to make it clear, what I'm proposing is not a return to the gold standard. The banks and their depositors would be engaging in commerce on a basis that offers depositors an alternative to a contractual agreement to accept fiat currency. Depositors could, if interested in holding coinage themselves, withdraw their coinage from their accounts. However, I think the likelihood of many doing so, given the cost of storage and security, would be pretty low. Their digital balances held by the government banks would fully suffice for their needs. In certain circumstances where the parties want secrecy, a treasury receipt similar to this one that I've shown could be obtained and utilized. So it's, not indicating who an owner is. The bearer holds that certificate. But again, it's in the form of receipt money, that this certificate is fully redeemable with the bank of deposit if the holder so chooses. So that's one part of what I think could help strengthen the international financial system. Now, I also have to say, I understand that the use of gold coins as currency is in a number of ways inefficient and environmentally harmful. But that said, there's already in the vaults of central banks and national governments a huge amount of gold that serves no purpose whatsoever other than to satisfy this ancient view that the more precious metals held, the wealthier the nation or the person. I mean, it's just sitting there doing nothing. If it was minted and backing currency, at least it would be serving some purpose in the economy. And on the gold standard, going back to the discussions at Bretton Woods, there has always been a lot of disagreement over the wisdom of even returning to some form of gold standard, but no disagreement, or almost no disagreement, that the system established at Bretton Woods, creating the gold exchange standard and fixed exchange rates between currencies, was doomed to eventual collapse. It worked for a while when the United States was the big player in the global economy, and we were able to call the shots. That's no longer the case. Now, here's an idea that may sound strange to add to this, but a public choice economist named James Buchanan had a number of ideas in the quest for a stable money system that included the rather novel idea that currency could be denominated and redeemable in construction bricks. Is anyone else familiar with this proposal? Well, here's the origins of it. And Buchanan first heard about this idea originating with an economist named C.O. Hardy, and its substance was passed along in an oral tradition by other economists. Buchanan resurrected the idea in an article titled "Predictability: The Criterion of Monetary Constitutions" that appeared in a volume that was edited by this guy, Leland Yeager. And as Buchanan writes about the brick standard, here's what he says. It will be useful to consider the advantages and disadvantages of common brick as the basis for an automatic monetary system. The government sets a schedule of money prices for common building brick of specified quality. At the same time that this price is announced, the public authority, which we shall call the Mint, announces its willingness to buy and sell units of common brick at the specified price in unlimited amounts. Money is issued from the Mint only in exchange for common brick, and money proceeds from the sale of common brick by the Mint are impounded in the Mint. Every individual has the assurance that he can at any time take a common brick or any quantity of common brick or a certificate of ownership of brick to the Mint and receive in exchange a monetary unit, say a paper dollar. And finally, no additional monetary or fiscal policy need take place. Having no powers to create or destroy money other than those implicit in the rules governing the operations of the Mint, the government has to finance expenditures through taxation or through real borrowing. Now, when I first read this, I thought, wow, this is really out of the box. And actually, I didn't first hear about it by reading Buchanan. I heard about it because a colleague of ours suggested this to the Russians back in the 1990s as a way that they might be able to stabilize their monetary system. And can you imagine what the Russian economists, thought about this hearing? But think about it. Here's an image I found on the internet of, how roads are made out of bricks now. This is a pretty interesting mechanical process here of how they're linked together. But if you think about it, construction bricks have nearly all the positive characteristics of gold or silver and none of the negative. There's an ongoing demand for bricks. They can be produced easily and to a rigid standard all over the world. They last for centuries. There's no need for the construction of expensive storage vaults or security systems to prevent theft. And so construction bricks have a lot of merit as a basis for securing backing currency. So there's gold and silver, and it has a limited supply. There's construction bricks that almost have an unlimited potential supply. They can be produced, inexpensively and in massive numbers with minimal damage to the environment. So I leave this proposal here for you to ponder as Buchanan offered it to us as part of what might be done. Now, about banks, returning to the issue of how they operate, I would argue that granting to the banks this privilege of making loans without having the cash to do it is inherently fraudulent for the reason that a bank should be required to have the cash with which to make a loan. That's fundamental in my view, in terms of ethical behavior. Think about when a bank is created. Its owners contribute the cash that becomes the bank's asset from which expenses are paid and any loans are made. The bank increases its ability to make loans by offering services to the public, checking and savings accounts. That attracts deposits of cash, which become part of the bank's assets, offset by a liability on the books. Then, subject to appropriate reserves, held back to protect depositors from losses incurred when the borrowers default, the bank is in a position to make loans with this cash. If the risks are prudently analyzed and underwritten and then priced for, the bank earns interest and perhaps a loan origination fee and eventually is repaid. So in this sense, the bank is and acts as a financial intermediary, which is what it should be doing. Now, banks can also make their loans available to other investors. As I've said earlier, this is what Fannie Mae did. They can pool loans together as collateral for a special kind of bond. A mortgage-backed security is one example of this type of bond, where some number of mortgage loans are the specific assets generating the cash flow in order to pay interest to bondholders and gradually or eventually repay the principal. So with a secondary market for loan assets, banks have a ready way to raise cash. And a mortgage-backed security is a very liquid asset. Bonds are very liquid, and there's a ready market for them all the time. The risk of having to bail out failing banks could be dramatically reduced if, as Mason Gaffney proposed, a law was passed that prohibited any financial institution that accepted government-insured deposits from providing loans for the purchase of land or accepting land value as collateral for any borrowing. Just think about that in the sense that it would protect bankers from themselves and protect us as taxpayers from imprudent banking practices. If you're going to buy a property, you won't get a first mortgage loan that includes the land value. You'll finance your house, and as a buyer, some other investor that's not protected by government insurance programs would provide the loan for you to buy the land. The interest rate is probably going to be higher, but it is a much more prudent way for the public to be involved in the process. So when land values fall, as they will when the cycle reaches its maximum stress point, the outstanding loan balances associated with real estate lending would correspond to the depreciated value of whatever building is mortgaged as collateral. And other investors with a greater appetite for risk would step in and price for the risk of lending on land, and they would be the investors that suffered the losses when land values fell. And so if they know what they're doing, they're going to price for the risk, and in the end, they will be able to profit in that endeavor. But again, another measure that I think would, as Mason says, would stabilize the banking sector and protect us from imprudent banking activities. Now, there's also this growing sentiment that states and cities would benefit by establishing public banks. The public banks would serve the financial needs of the community rather than creating shareholder value or maximizing return on investment. So they would have a social purpose. I mean, this is what we've heard, again and again from people like Ellen Brown, and she's made some great progress along championing the move for establishing public banks with the Public Banking Institute. And because of her efforts, elected officials are learning the history of the Bank of North Dakota and its model. It's been in existence for more than a century. Here's what Ellen has had to say about the Bank of North Dakota. What a state can achieve by forming its own bank has been demonstrated in North Dakota. There, the nation's only state-owned bank was formed in 1919 when North Dakota farmers were losing their farms to big out-of-state banks. Unlike the Wall Street mega banks mandated to make as much money as possible for their shareholders, the Bank of North Dakota is mandated to serve the public interest. Yet, it has had a stellar return on investment, outperforming even J.P. Morgan Chase and Goldman Sachs. And, their executives are paid a reasonable salary, but they aren't compensated in the tens or hundreds of millions of dollars while their entities go into financial trouble. So there's a big case to really expand the role of public banks in our society as a means of responding to the challenges of stress as the economic cycle continues. And what about the corporate form of ownership itself? What legal privileges are the source of the most destructive activities on the part of corporate executives? Well, a good starting point, I think, would be to add diversity to corporate boards, to include seats held by non-management employees elected by their fellow employees. Other seats could be reserved for representatives of institutions such as universities holding some level of shares in the corporation. But we need, if we're going to have corporations, we need boards that are more representative of the communities in which they operate and in the society as a whole, so that the too many corporate boards are dominated by people who have common interests, and they're on each other's board, and they're they have very narrow focused interest in shareholder value, and that's about it. Wall Street firms like to talk about investment fundamentals. They trade in equities that can increase or decrease in price by almost any percentage in just a day. And that should say something to us. If you have an asset that increases by 15% in value in one day, or loses 20% or 30% of its value in one day, that tells you that this is a market that's really a gambling casino. And that if there were ever any fundamentals, the fundamental meaning that the value of an asset should be the capitalization of its income stream, well, how many stocks do you hold that actually pay a dividend? You buy a stock, you're lucky if you get any dividend at all, and the corporations can get away with not paying dividends because they know that their stock is involved in a gambling casino, that people are buying the stock in anticipation of its market value climbing. And should corporate executives be permitted to order the repurchase of their own stock using borrowed funds to pay for the stock? Well, there are just so many issues to discuss here that need to be put on the table, but certainly corporate governance is in need of some major attention and reform. And lastly, the political system. We'll spend just a couple minutes on this, and we will have reached the end of the lectures. So I think we need to try and do what we can to expand participatory democracy. And none of the ideas here on this next slide are mine, but these are ideas I think are worthy of pursuing. Term limits for legislators, should elected office be a profession? I would hope we could get away from that to some degree. Public funding of elections, ranked choice voting, elimination of the electoral college and establishment of the direct election of the president and vice president, elimination of life appointment for positions on the U.S. Supreme Court. Those are just a starting point of some of the things we could debate. Just on what's that slide, I think is about a 2 or 3 hour debate that we can have. And maybe we could come back next week and do that if people want to. I leave the final words on the state of affairs to Henry George, not from Progress and Poverty, but from social problems. And if I've accomplished anything with this series of lectures, it is to validate the urgency expressed in these words by George when he said, "The great work of the present for every man and every organization of men who would improve social conditions is the work of education, the propagation of ideas, It is only as it aids this that anything else can avail. And in this work, every man who can think may aid, first by forming clear ideas himself, and then by endeavoring to arouse the thought of those with whom he comes in contact. And that's what I've tried to do with you folks. And I hope I've had some impact on your thinking. So with that, it's 8 o'clock. I finished with the lecture. We can have some discussion for a short while, and then we'll maybe have a quick note of how many people would like to come back for one more week of open discussion. So what's on your mind? How have you reacted to all this? I'm sure that some of what I said has been pretty controversial to you, and maybe you're wondering, what the heck have I been drinking?
Ed, if you are in favor of holding an additional session to discuss these great points that you had listed, we could certainly do that.
Okay. Well, it depends. I'm willing to do it. The question is if there is a desire on the part of the people who've been hanging in here with me. That would mean we would have a robust discussion, and I would hope that many more people would choose to participate in that discussion.
Yeah, I can see here one more week. So
Great.
There is
Marty
support.
has his thumbs up, so I'm sure Marty and I could probably have a one-on-one discussion that would last an hour.
Yeah, and Marty is here. Marty will be starting his part 2 of his class on reality economics. Marty, would you want to step in and give some words on this?
Yeah. Appreciate the opportunity to talk about the book that Brian Hodgkinson wrote. The more I read about it, read Brian Hodgkinson, I would say that he's essentially written a Bible on par with Progress and Poverty. It's a different type of book, but what he's done is update it and include microeconomics as a mode of thinking, but include land issues, what's missing in your standard economics course. So I'm going to be teaching 5 courses coming up after next week. Ed's coming back, but the week after. The first one's going to be about the law of rent, and then we're going to talk about wages. We're going to talk about credit. A very important chapter. The last lecture is going to be about money, credit, and interest. I wrote a paper you can get on academia.edu called Why Anti-Marxists Loves Marx. And that's essentially taking Hodgkinson's chapter 13 and laying it out, because he does a good job of working with Henry George and correctly placing the where Marx was off base. Essentially, if you follow Henry George and you follow what he was describing in that chapter, Marx becomes superfluous. So that's a course that's coming up. Should be a lot of fun. But appreciate the opportunity, Ibrahim.
Pleasure, Marty. Always a pleasure, Ed, to listen to you. So we'll meet again for a mega discussion session next week.
Yeah, everyone come armed and ready to take me on for some of my bizarre ideas that I put on the table. I don't pretend that I have all the answers or have thought about everything needs to be done. But what I've tried to do, again, is use the principle that the perfect is the enemy of the good, at least in the short term. While we fight for the perfect and hopefully somehow get there, we need to be making steps in the direction that will soften this blow that's going to come if possible, because I think the statistics and the data, bear out that it's going to be brutal when it does come. And my intention, hopefully I'll be able to do this, is to update the statistics once a year between now and 2026. So do an abbreviated form of these lectures next year, without a lot of the theoretical discussion, but just an update on the segments of the economy and what the data is telling us is happening, and see if in fact we seem to be moving closer to that 2026 downturn, and maybe examine some of the steps that are being taken by government at the different levels that might have a chance of mitigating what is about to come.
Thank
So
you.
with
Ed.
that, I guess we'll say good night to everybody, and thanks for coming by.
Good night.